Hi everyone, I'm Allie Columbus and I'm Arts Association Executive. And as many of you have heard, new FinCEN requirements go into effect on March 1st. So to help us understand what's changing and what it means for your business, we've invited one of our valued partners, Stewart Abstract. So joining us today, we have Amy Lee, Stewart's Operation Manager. And Amy, thank you for being here, and thank you to the entire Stewart Abstract team for being here to share this important information with our members.
Absolutely, we are thrilled to be here. Hi guys, as Allie mentioned, I am Amy Leed here to talk to you about FinCEN reporting requirements. This is a new rollout brought to you by the federal government effective March 1st of 2026. So really the important things to know about the changes that are happening is the reporting requirements are mandatory for any applicable deal that closes on or after March 1st, 2026. Now we'll dig into what makes it applicable a little later in the video. It's important to know that this is a federal rule and the information requested by the title company is not dictated at all by the settlement agency. This is a federal ruling and everyone needs to play by the same rules. Whether or not a transaction needs to be reported is triggered by the buyer and how the buyer is purchasing the property. But if the transaction is triggered, the seller will need to supply additional information too. I wanted to cover who or what is FinCEN. So FinCEN is a federal government agency and their acronym stands for Financial Crimes Enforcement Network. So that's where we get FinCEN from. They are specific to anti-money laundering and just tracking money movement to make sure that businesses are following the appropriate rules. So AML rules have been around for a really long time, but the data collection rules and the list of people now responsible to report that data back to FinCEN have recently been expanded. So really what they're looking for in the transaction is knowing who is buying and benefiting from the purchase of real estate. They want to prevent illegal money from entering the real estate market, specifically with residential transactions. So there's certain red flags that trigger reporting requirements. Again, that is dictated by your buyer. So the first thing to keep in mind is if your buyer is making an all-cash purchase, that would be then considered a triggering requirement. Also, if the buyer is an entity or trust, so purchasing the property under an LLC, a corporation, anything like that would qualify them for reporting. Unusual payment methods. So when we say all cash, it doesn't necessarily mean that they are paying with funds that are currently on deposit in a bank. They could be using cryptocurrency, they could be using a seller carry for financing or private money lending. Those would all be considered cash purchase transactions. So the trigger here is if a lender is involved and they are not BSA, AML, SAR regulated, that would count as a cash purchase. If you have any questions about that, ask the lender and they would be able to tell you if they are BSA, AML compliant. All right, so reportable transactions. Now the information I'm going to share with you here momentarily, please understand is subject to changes and updates because as title companies are learning more about the FinCEN rollout and consulting with the underwriters we use, they are advising us to err on the side of caution and potentially report things that are not strictly 1 to 4 family residential real estate, which is how the rule was rolled out initially. So again, that is a focus for part of the reporting requirements is real estate purchase that has a residential dwelling, 1 to 4 family, as all or part of the property. So as we dig into this a little bit more, we are now realizing that vacant land purchases can actually qualify for FinCEN reporting. The reason being is, what are they going to do with that vacant land? If they're planning to build a residence or a 1 to 4 family unit, that would absolutely qualify and need to be reported when the land is purchased. Another thing that we have recently learned is zoning does not matter when determining a qualified transaction. So if you are working on a commercial real estate purchase, but maybe it's a mixed use building, a barber shop below with an apartment on top, that would absolutely qualify for FinCEN reporting because there is a residence attached to the property. So that really is what dictates whether or not transactions are reportable in terms of the property. Now, again, we talked about the buyer needs to be an entity. So whether they're an LLC, trust, corporation, partnership, an estate, an association, they are all applicable in terms of FinCEN reporting. And one more time, no mortgage or traditional bank loan is associated with the purchase of the property. So we are looking for those one-off hard money lenders, cash from the bank, cryptocurrency, any of the above would qualify. Now, deals that are not reportable, because of course not every deal that's coming down the way is going to be reported for FinCEN. Any transaction that is individual or an individual's purchasing property would not be reportable because there is no entity purchasing. Any deal that involves a mortgage obtained at a traditional bank or credit union would not qualify for FinCEN reporting because these institutions have an AML/BSA department that already reports required data to FinCEN. Government-backed loans also would not be reportable because they are working with FHA, VA, USDA. Again, they all have and work with FinCEN currently. True commercial purchases with no residence or future residences on the property would also not qualify for FinCEN reporting. So what information needs to be collected as part of a FinCEN transaction to be reported? So we are looking at the legal entity that will be receiving ownership, or the buyer for the property. All the entity's beneficial owners with 25% or more ownership interest would need to present their personal data, so some sensitive information. If a trust is purchasing the property, we would also need information related, of course, to the trust or business and the beneficiaries of the trust. Any individual who's signing on behalf of the business or trust, whether they're involved with that entity or not, would also need to provide some key information. If the buyer triggers the transaction for FinCEN reporting, we will need some small information from the seller. Not too much data there, but we do need some info from them. Of course, details from the property as part of the purchase transaction will need to be acquired. Most of that is going to come directly from the search that's done on the property and the work that the title company does, though. And then, final thing, details about the transaction itself, including the total consideration, where the funds are being generated from as far as bank sources, who is gifting any money, and how those funds are obtained is all part of the reporting requirement. So some key timelines that I just want to go over with you. FinCEN reporting should be identified before the agreement of sale or the contract is finalized by the representing agent. It is not up to the agent to determine 100% if it is a FinCEN reportable transaction, but we value your input as a partner and of course a key component to the transaction. So you are the first line of defense to determine that a business is going to be purchasing the property and that they are going to be using cash or non-traditional financing. So once the title company receives the order with directive, whether you would think that it's been reportable or not, we will review the information received and we will confirm that with you so that you can relay that information back to your clients, okay? But it is the title company that will ultimately decide if it is a FinCEN reportable transaction. Once closing happens, information is reported to FinCEN by the title company or a third party, because a lot of title companies out there are outsourcing this process. So it is possible, depending on who you work with, they could be handling it in-house as we are doing with Stewart Abstract, or outsourcing that to a third party. So again, that is important information for you to know as an agent so that you can relay that to your clients. So after closing, we have a maximum of 30 calendar days to get that information over to FinCEN. So what this really means is we need to know, again, at the start of the order, we need to get that information. Please make sure you prepare your clients for those additional information requests, because we are going to be asking extremely sensitive information, and people are not going to want to relinquish that without a heads up. This also means that we cannot go to the closing table unless we have all of the FinCEN data that will be needed. There are criminal penalties associated with missing the filing deadline or not reporting appropriately. So please do not ask your title company for exceptions and to close and then I'll get the data to you later. That is not something that most companies are interested in doing. So I touched on it a little bit already, but your role as the agent, you want to flag non-finance deals early. So again, if it's non-traditional financing, you want to let us know. Tell your client that reporting is most likely going to be required and prepare them for ID and ownership questions. Share the info with your title company as soon as you are aware, as soon as possible. The earlier, the better. If we don't know and we're not asking, it can very much affect the timeline of your deal. So missing info, again, if we don't have all that FinCEN data that we need for the final reporting, it can actually delay closing. Your customer also, if they're an entity, if they're a trust, that requires additional documentation and personal data collection for those beneficial owners or trustees. They might need time to get that information together. So we don't want to put your customer or the title company in a crunch when we are all trying to get to the closing table and provide great customer service. Foreign buyers also are part of the FinCEN reporting requirement, so they might need additional time to gather those documents and information that we are requesting from them as well. So we just put together a really quick agent checklist, cash deals in FinCEN. Again, you want to ask your clients early, is this deal financed or is it all cash or non-traditional financing? If it's all cash or non-traditional financing, think FinCEN reportable. Tell your client up front that extra reporting is required by law. It is not a title company requirement, it is a federal ruling. Prepare your buyer for ID requests and the collection of some sensitive data. If they are using an LLC, corporation, entity, trust, gather ownership and control information as soon as possible. The title company will also gather this information, but you can provide that to us ahead of time. It will just make the process go smoother so we can at least know who we need to specifically contact and gather information from. Again, share anything that you learn about the deal with your title company as soon as you know. So the last thing I leave you with is please remember, your title company is your partner in this transaction. Work together to provide the needed information that will provide a great customer service experience across the board with no surprises. Ask questions to be sure, and we will all stay compliant within the transaction together.
That's great. So again, big thank you to you, Amy, and the whole team at Stewart Abstract. This is really important information, and please don't hesitate to reach out with any questions. Thanks, guys.
Thank you.